Good morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. What I'd like to talk about this morning is two things. Basically the panic sale we saw on Friday and the technical levels we're looking at the S&P and the Nasdaq. Okay, so first off, why do I call this a panic sale? It had all the markings of what we've seen just back in June, the so-called Brexit panic sale. And panic sale is a very subjective term, but we can kind of measure it when we look at the percentage of down volume that we're seeing on an NYSE stocks. So let's say anytime we see greater than 90% down volume on any particular day, we can call that a panic sale. And there's some pretty good data going back that when you do see these type of days where the percentage of down volume is so great that actually within a few days the market recovers very nicely. Now, of course, there's two outliers to that, and that, of course, was in 1987. That was October 16th. The market was down about 97% down volume. Market fell about 9%, and on Black Monday, it fell about 20% the market on 99% down volume, greater than 99%. That was the biggest one day since 1970 that we have records on where the down volume was that great. And even from that day, the market did recover within a few days, and it keeps improving within a few months. Now, on the Brexit day, on that Friday, we had a down volume of about 92%, and pretty much the market recovered in a few days. Now, last Friday, the down volume was at 96.8%. So again, we're seeing the same kind of scenario, and specifically when you take into account what the possible reasons were. And again, this reason that supposedly the Fed will raise rates, I don't know if they will or not, but the point is it's not a surprise to the market. The market's been talking about this for 2 years, and of course it keeps getting pushed off, and one day it will happen, and no doubt there'll be a knee-jerk reaction, as we saw on Friday, but this is already discounted by the market, no matter what the Fed does. So when you see such panic sales, the point is like, just kind of think about what's going on, stay cool, and then we'll see how the market plays out in the next few days, because naturally things could get worse. We don't know that. However, as the market's making new highs, we see a panic sale like that one day, we're kind of going to go with the probabilities on this that we may see a pretty good bounce as we're seeing this morning. Now, as far as the level goes, the S&P, it was pretty bad technically. It sliced through its 50-day moving average. However, it still closed at 2127 on Friday, which was above the July 8th breakout when it broke into a new high through double bottom base past its June high of 2120. And it's still above that level. And it's got a little bit work to get back above its 50-day moving average, which is about 2163. And naturally, if we do see a bounce, we do want to see the market make new highs from here. If it stalls again at the 2200 level, that may not be so good. Now, the Nasdaq market, the Nasdaq came right into its 50-day moving average, right around, actually it's a little bit below it, but its 50-day moving average is at 5140, and we're a little bit above that now. And actually, the thing to keep in mind is the Nasdaq is still above its 2000 high of 5132 as we speak. So again, we're looking at support level at 5,000. If it were to break through 4874, which is its 200-day moving average, then again, okay, maybe something's going on. We're getting in trouble. Or if it tries to make a new high past that 5200 level and it can't hold that, then again, okay, maybe we are get into some turmoil. And lastly, it's worth mentioning that everyone talks about how September is the worst month in the market. That's not exactly true. It depends how you look at it. On average, it is down about 0.7%, but that's because of some outliers of times when we've had bear market. But actually, September, if you look at all the September since 1926, as a median gain of about 0.1%. So keep that in mind, especially if you have a good July, August. Septembers do tend to be pretty good. So that's just all a few facts here to keep in the back of your mind. As usual, that price and volume be your guide. Again, in summary, look at the levels. Don't fall into the panic, especially when it's related to some news that's already more or less known by the market. So, have a great trading week. This is George Kachuk, we're RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago.